Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. Today's date is October 18, 2024. Let's get started. Start by taking a look at the 4-hour chart, and what we've seen in trading this week is a move to the upside, a move to the downside, and a move back to the upside. Here we're kind of trading mid-range of the trading range for the week. So that's the overall view. Now on the top side, we did move into this swing area back through here, which had a number of different swing lows and swing highs going back to the month of July. Before moving to the downside, we returned back to that level, got into that area between 1.3833 and 1.3847 and found willing sellers. The move to the downside came right back down to the 61.8% retracement of this move to the downside from the July, or I guess that's the August high to the September low. That level came in at 1.37449, and what we do, we bounced off of that level in between this resistance up here and the 61.8% retracement below is another swing area that I outlined in the video yesterday, which includes this swing lows right here, which formed the floor and then became a ceiling before moving to the downside. So we moved back to that level in trading this week. Traded above and below it, as you can see. More recently, this is again the 4-hour chart. Yesterday and into today, the price has been able to find support buyers against the low of that area at 1.3786. So if I were to give the tilt, even though we're in the middle of the trading range, it's still to the upside here for the dollar versus Canada, weaker Canadian dollar next week. The Bank of Canada will meet, and expectations are for a 50 basis point cut, so perhaps that's leading to some weakness in the Canadian dollar, continued weakness in the Canadian dollar, as the U.S. Still, they expect a 90% chance of a 25 basis point cut, but some concerns about growth, we saw better growth this week, which suggests that perhaps the Fed may not be as aggressive going forward as maybe the market thinks, or even the Fed thinks, for that matter. I don't know. We'll see. Take a look at the hourly chart. It's important. Why? Because you see this blue line right here. This blue line represents the 100-hour moving average, and it's the market's been tracking above it and trading here today. If it also comes near the low of that swing area that we're looking at off of the 4-hour chart. So it just adds to the level's importance going forward. If the price were to move below this swing area and also below the 100-hour moving average, that would give the seller some short-term hope, some short-term confidence, perhaps to probe more to the downside, maybe back down toward the 200-hour moving average, or the low price that we saw against the 61.8% retracement down here near the 1.3744 to 1.3752 level. So there you have it, a technical look at the dollar versus Canada. The buyers are still in control, and we'll see if they can push to the upside and move up toward our high prices. But of course, next week we have key Bank of Canada interest rate decision, which is in play as well. So be aware, be prepared. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.